Warmest greetings to the participants of the virtual Think Global Conference Foreign Direct Investment Day. I chair two very important committees in the Philippine Senate, and today I'd like to give you a brief overview of my work. In the first committee, this is the Committee on Ways and Means, we had hearings and debates throughout the year on a very important bill that would rationalize tax incentives and lower corporate income tax. This bill, or the predecessor of this bill, was filed some 25 years ago. Very political, very divisive, and highly debated. And finally, after 25 years, on March 26, barely a few weeks ago, this bill was signed into law. So we're very happy, and I'd like to tell you a little bit more about it. On reducing corporate income tax, this bill will bring the Philippines closer to the corporate income tax rate of its ASEAN neighbors. Corporate income tax now is 25%. It used to be 30%, and this is a general rate for all. But for domestic corporations with total assets not exceeding 100 million pesos, excluding land, and total net taxable income not exceeding 5 million pesos, that rate would be further reduced and it would be 20%. It is also viewed as a lifeline for businesses that are hard hit by the ongoing pandemic, and it's definitely a game changer for both big and small businesses. Now, on the incentive side, CREATE remains consistent with its objective to make a fiscal incentive system that is performance-based, targeted, time-bound, and transparent. The new incentive package aims to attract businesses that will create more jobs, bring in technology and innovation in the Philippines. We also offer enhanced deductions, which were not previously offered in the past. 100% additional deduction on research and development expense, 100% additional deduction on training expense, and so on and so forth. It likewise promotes inclusive growth by offering longer incentives for those that will choose to invest in the countryside as well as in areas recovering from disaster or conflict. I must say that what is really important is that it brings an end to the uncertainty that a lot of investors complained about in the Philippine investment climate, and will greatly benefit the business sector as we work to rebuild our economy from the crisis caused by the COVID pandemic. Meanwhile, my work in the Senate also includes interventions that will promote sustainability and guided by future-thinking principles. We need to be mindful of our sustainable development goals, from ending poverty, improving access to healthcare, and the need to transform our cities into sustainable cities and communities. It is worth noting that millions of Filipinos rely on agriculture as their main source of livelihood, and we need innovations and more sustainable practices and technologies. All of these are potential investment opportunities. So I thank you, and I hope that you are enlightened by that very brief overview, but I'm sure you can get more details as you need. Thank you.
A good day to all. I am Senator Coco Pimentel of the Republic of the Philippines. I am the chairman of the Philippine Senate's Committee on Foreign Relations and the Committee on Trade. Thank you for giving me this chance to participate in this year's Think Global Conference organized by the International Trade Council. We indeed need to think outside of the box on ways to help each other during this very difficult time of a pandemic. Let me tell you about some recent developments in the Philippines in the hope of attracting your attention as investors towards my country. Yesterday, April 11, 2021, our new law called Corporate Recovery and Tax Incentives for Enterprises, or the CREATE Act, became effective. Under this new law, we lowered corporate income taxes by 5%, which was even made retroactive to July 2020. This measure is estimated to provide almost 1 trillion pesos worth of tax relief to enterprises over the next 10 years. This law therefore signals the Philippines' openness to shift to a lower tax regime philosophy. Our Congress is also considering other measures designed to rationalize and make more attractive or reasonable our rules on foreign investments, such as the amendments to the Retail Trade Act, the Foreign Investments Act, and the Public Service Act, among others. The Congress of the Philippines, together with our strict, fiscally conservative, and future-thinking Secretary of Finance, constantly explores for ways to make the Philippines a fair, business-friendly destination. Our golden age of infrastructure is here under President Duterte's Build, Build, Build program. This will create new jobs for our people and open up new investment opportunities. The Philippines currently has record high international reserves and a strong currency. Not only that, the Global Innovation Index, GII 2020, considered the Philippines as one of the economies to have registered the most significant progress in their GII ranking over time, placing it fourth among the 29 lower middle income group economies. According to the World Intellectual Property Organization report, the Philippine economy stands out for the innovativeness of its business sector and the innovation outcomes produced by its investments. The Philippines ranks 8th globally in the utility models by origin and 6th in productivity growth. The Philippines is also well integrated into global trade, ranking first in high technology imports, third in high technology exports, 8th in ICT services exports, and 10th in creative goods exports. And talking about intellectual property, you can be sure that your intellectual property rights will be well protected here in the Philippines. The Philippines is also part of the largest free trade area in the world, and we expect to approve this largest free trade agreement, the RCEP, by this year, 2021. In the Philippines could also be found what I would call some minerals of the future, like nickel, cobalt, and manganese, among others. In short, I therefore firmly believe that the Philippines remains a prime place for business and investment even amidst this pandemic. And as I have stated earlier, the Philippines will always endeavor to be a fair, business-friendly destination. This shall be discussed at the forum's first topic, Make It Happen in the Philippines, Investment Opportunities in the Philippines, by our esteemed speaker, Ms. Rosa Katarina Banzon, the Commercial Attache of the Philippine Trade and Investment Centers in Singapore and in Malaysia. So thank you very much for your time and attention, and enjoy learning from this 3-day event.
Hi, I am Katarina Banzon, Commercial Attaché of the Philippine Trade and Investment Center in Malaysia and in Singapore. Both PTICs are the representative offices of the Philippine Department of Trade and Industry in each respective country, with the mandate of promoting trade and investment between the Philippines and Malaysia and the Philippines and Singapore. I will be presenting the latest investment promotion campaign of the Philippines, the Make It Happen in the Philippines, showcasing the Philippines as a preferred destination for manufacturing and IT BPM services. Let me begin with an outline of the presentation. First, we look at the Philippine economy. Then, we see the outlook, where we are headed, including the Rebuild Philippines strategy. And finally, we look at the investment performance of the Philippines. There is a clear trend towards recovery for the Philippines. While the COVID-19 pandemic disrupted our country's growth momentum, we are already seeing signs of recovery as manufacturing production, exports, and our GDP have taken a U-turn. Just to highlight that while our full GDP in 2020 contracted at 9.5%, on a quarter-on-quarter basis, our economy still grew by 5%. This improvement was the result of the further reopening of businesses and wider accessibility of public transport since October 2020. Fresh off a 25-month high in January, the Philippine Manufacturing Purchasing Managers Index for the country sustained its figure at 52.5% for February 2021, which is still above the benchmark of 50 that distinguishes expansion from contraction. Moreover, The latest employment data showed that between October 2020 and January 2021, around 1.5 million jobs were restored. The Philippines is poised for a good rebound in 2021 despite at a protracted and slower pace. The Bangko Sentral ng Pilipinas, or the Central Bank of the Philippines, forecasted the GDP growth to be between 6.5% and 7.5% in 2021. Meanwhile, IHS Markit projected our GDP to rise by 7.7% year-on-year as economic activity gradually improves with continued strong growth in 2022. Despite the setbacks and challenges brought about by the pandemic, the Philippines still remains a conducive place to do business. We are also considered one of the top emerging economies in the world for investment. Reputed business magazines such as The Economist rank the Philippines as the sixth emerging economy with high financial strength. CEO World Magazine placed the Philippines among the top 10 countries to invest in post-COVID era. As such, we are working on rebuilding the economy's robust growth, but this time higher than pre-COVID levels. Moreover, in spite of the devastating natural disasters and COVID that have battered the country, the World Bank, the Asian Development Bank, and other international institutions project the country's economic fundamentals as among the strongest and most stable in Southeast Asia. As we reopen the Philippine economy, we are implementing an industrial strategy called Rebuild, or Revitalizing Businesses, Investments, Livelihood, and Domestic Demand. This is anchored on a vision to create a more modern, dynamic, and responsible Philippines. This strategy is aimed at jumpstarting and reinvigorating the economy by revitalizing consumption and enhancing production capacity. Accordingly, the two broad strategies of Rebuild are: 1. To revitalize demand, and 2. To empower local industries to capture the demand in agriculture, industry, and services sector. On the demand side, it starts with government support via economic stimulus to keep jobs. This is important to attract more production activities and create a better business environment for investments. On the supply side, we will enhance production capacities in the agriculture, industry, and services sectors to help build our export competitiveness and manage imports. This would then create a virtuous cycle of sustained and growing economic activity with strong domestic linkages. Hence, the infusion of more FDIs play a dual critical role in our country's economic development by addressing the supply chain gaps in production and enabling the modernization of local industries. I am happy to report that we are seeing signs of recovery through our investment performance. Our investment approvals are on an uptrend. Foreign direct investments rose by 29% in 2020 to $6.4 billion, bucking the decline of its Southeast Asian neighbors and of the world. The Board of Investments continued to reach its target of 1 trillion pesos, or $19 billion in project approvals in 2020, with a total of approved investments of $20.55 billion. Though it was slightly lower than the project approvals in 2019, it remains the second highest level of project approvals of the Board of Investments history, considering the restraints brought about by the pandemic. For this year, the Board of Investment announced a $25 billion project approvals target for the agency. It may be noted that we are already gaining much momentum as the agency's investment approvals in the first 2 months of this year surged by 156% compared to the same period last year, reaching $2.5 billion in 2 months. Next, let me share the unique and compelling advantages of the Philippines. One of the key advantages of the Philippines as a preferred investment destination is our demographic sweet spot and rich talent pool. 1. Demographic sweet spot. At this point, the country holds immense potential to achieve breakthrough growth through greater productivity, higher savings rate, and increased creativity. The country's demographic sweet spot began in 2015 and will last until 2053. The Philippines has a young population where the median age is 25 years old. 2. Large number of graduates. Our labor force stands at 49 million, and we produce over 700,000 graduates annually across several disciplines such as education, engineering, IT-related fields, medicine and health-related fields, which are already talent pool for manufacturing and R&D activities. 3. Level of commitment and loyalty. Equally important, employers who exhibit commitment to their workers will reap the benefit of a low turnover rate in the Philippines, which has one of the lowest in the region at only 1.9%, second only to Singapore. 4. Industrial peace. Companies will also enjoy industrial peace in the country. The incidence of strikes and lockouts in the Philippines is very minimal, at only 11 last year compared to a high of 800 in China. The Philippines offers a domestic market of 110 million people and access to an ASEAN market that has more than 600 million people. Our country also has access to key markets through our free trade agreements with other countries and regions, as well as the US Generalized System of Preferences and the EU Generalized System of Preferences Plus. It is also worth noting that the Philippines is the only country in ASEAN enjoying the US GSP. As you may know, the Philippines, together with 14 other countries, have recently signed the Regional Comprehensive Economic Partnership Agreement. As shown, RCEP carries a significant economic weight, accounting for almost a third of the global GDP in 2019. With a combined GDP of 25.8 trillion US dollars, RCEP is bigger than the US-Mexico-Canada Agreement and the European Economic Area. Aside from market integration, of great significance is the further integration of its members' production networks by allowing greater accumulation of rules of origin, presenting harmonized rules and procedures that facilitate trade, covering areas such as services and intellectual property as well. For the Philippines, more specifically, RCEP presents an enhanced platform for attracting investments in export-oriented manufacturing. RCEP also sustains and enhances the country's integration into the regional production and forms an important pillar to our last touch trade strategy. Among RCEP member countries, the Philippines provides one of the best access to markets outside the RCEP area, as we continue to benefit from preferential access such as the US GSP, EU GSP Plus, as well as ASEAN and bilateral FTAs, and more collaborative and cooperation-based platforms such as the Joint Commission on Trade and Economic Cooperation. The Philippines has also been less affected by the number of trade measures being imposed compared to other ASEAN member states, as shown here. During the pandemic period, the Philippines did not impose import and export restrictions. In fact, importation of health equipment and supplies deemed critical or needed to address COVID-19 public health emergency was given exemption from duties, taxes, and fees. Some import requirements were also streamlined. The Philippine government has also assured that the movement of cargo and people remain unhampered during the pandemic. We assisted local and foreign manufacturers and exporters at the height of the lockdowns, enabling them to continue their factory operations, even helping them with a shuttle bus rental for companies' employees. This just shows our commitment to our manufacturers in the country. In terms of available locations, the Philippines has a plethora of industrial parks and economic zones which are readily available for expansion and new investments. Currently, the country has 80 manufacturing economic zones, 5 of which have been newly declared last year. These locations have the ready infrastructure and most have easy access to international seaports and international airports, making it an ideal manufacturing site for your company. Next, let me go through the investment opportunities in the Philippines, which you may want to consider for your next investment. Currently, we have the 2020 Investment Priorities Plan, which lists the preferred activities that are eligible for investment incentives. Now that the CREATE Act has been enacted into law, We are formulating the Strategic Investment Priorities Plan, which will enumerate qualified projects eligible for incentives. Other activities entitled for incentives are export activities, which include manufacture of export products, services export, and activities in support of exporters. The special laws or the mandatory list in turn contains areas or activities where the inclusion in the IPP and/or grant of incentives is mandated by law. And finally, the ARMM list, which is not included in the slide, encompasses priority investment areas that are determined by the Regional Board of Investments of the Autonomous Region of Muslim Mindanao. The Philippines is also being positioned as a hub for manufacturing and product design, some examples of which are the Samsung R&D Institute Philippines, and most recently, Dyson, which announced the hiring of 400 software engineers for its new hub, a software lab in Manila. The electronics industry of the Philippines hosts about 500 global companies. The industry is characteristically export-oriented, accounting for 61% of total Philippine exports in 2019, amounting to $43 billion. Of the total electronics exports, 70% are semiconductors, while the remaining 27% are manufactured electronic products. The Philippines is therefore a vital part of the electronics global value chain. We are particularly strong in testing, packaging, and assembly of semiconductors. We are also establishing a dedicated center to support IC design. We are ready to become the home of IC design companies serving customers worldwide with a growing pool of IC design engineers. Investment opportunities are in electronics manufacturing, chip design, and original product design and development, especially for cutting-edge products and technologies in healthcare, automotive, and aerospace, including autonomous vehicle batteries and smart wearables. The iron and steel industry is critical to the industrialization goals of the Philippines. We are more than keen to have our own integrated steel mills established in the country. Steel is a very important component to the infrastructure development or the Build program of this government. There is a huge domestic demand with our apparent steel consumption at about 10 million metric tons per year. Our target is to reach about 20 million metric tons ACS by 2030. To meet our goals, we invite investors to establish modern and green steel mills in the country for the production of both long and flat steel products, including auto-grade steel, which we do not have yet. Good news is, we have untapped resources for this industry. We have one of the world's largest magnetite sand deposits at over 1 billion metric tons. We also have the Semirara coal and limestone, and over 55,000 workers skilled in various areas in iron and steel making. The chemicals industry is the second largest contributor to the Philippine manufacturing in 2019. We have more than 1,400 manufacturing firms, including 6 producers of oleochemicals and another 6 for petrochemicals. We have more than 47,000 registered chemicals and chemical products or substances in the country. Even at this rate, we are a net importer of chemicals, which is growing at 9% annually. As the trend now is for environment-friendly and non-toxic chemicals, the Philippines could be a prime production location for green chemicals. Copper is another area for investment. Copper is one of the largest mineral resources in the Philippines. With reserves of around 4 billion metric tons, our country is one of the world's largest producers of copper. Our technical expertise in extraction means that we can produce a wide variety of copper goods to service many other industries. With multiple methods of extraction, the Philippines is well placed to manufacture and export a range of copper-based products such as copper ore, copper wires, cables, and harnesses, to name a few. We are also home to a world-class smelting facility with the ability to create numerous copper-based products. The industry has the potential to extract other energy sources such as geothermal gases as well. The resilience and determination of the workforce has contributed to the success of the industry with over $1.9 billion worth of copper exports in 2018. We have the potential also for expansion, and we can make it happen through the establishment of select world-class copper mines, a copper rod casting facility, and the promotion of higher value copper products. To support these investments, the Philippine government has been enacting laws to support both domestic and foreign companies. These are: 1. The Corporate Recovery and Tax Incentive for Enterprises, or the CREATE Act. As you may be aware, the Philippine government has been working on rationalizing, modernizing, and offering more relevant incentives for companies through the CREATE Act. The CREATE Act was recently approved in fact by the President on March 26, 2021. Qualified activities and projects can enjoy incentives such as 4 to 7 years of income tax holiday, 5% special CIT rate based on GIE for 10 years in lieu of all national and local taxes, enhanced deductions, duty exemption on importation of capital equipment, raw materials, spare parts and accessories, VAT exemption on importation and zero VAT on local purchases, VAT and duty exemption on importation of COVID-19 vaccines, VAT and duty refund on importation of petroleum products, VAT and duty exemption for importation of crude oil for refining process. Other key features that can be enjoyed are removal of export and nationality bias, reduction of CIT rate from 30% to 25% effective July 1, 2020, and the President's flexibility in granting incentives for highly desirable projects with minimum investment capital of 50 billion pesos or at least 10,000 jobs generated. Other enabling laws are the Philippine Innovation Act, which encourages entrepreneurial attitude to stimulate growth in businesses and removes obstacles to innovation, and the Transnational Higher Education Law, among others, which allows foreign higher education institutions to set up education facilities in the Philippines. Key reforms to improve business environment have recently been enacted. Some of these are the Ease of Doing Business and Efficient Delivery of Government Services Act of 2018, Executive Order Number 127, which allows value-added service providers and internet service providers registered with the National Telecommunications Commission to have direct access to all satellite systems, the Philippine Competition Act, the updates in the Foreign Investments Negative List, Telecommuting Act, and the Revised Corporation Code of the Philippines. The Philippine government is serious about its post-pandemic recovery with the proposed amendments or legislative reforms on the following: the Public Service Act, the Retail Trade Liberalization Act, and the Foreign Investments Act. For RTLA, to lower threshold to 500,000 US dollars and to remove the requirement of 830,000 US dollars per store. For PSA, to limit the definition of public utilities to power transmission and distribution, waterworks, and sewage systems. Redefining this 84-year-old law will also attract more foreign investments, in particular, allowing more foreign investments or participation in telecommunications, including fixed mobile and satellite services. For FIA, one of the notable proposed amendments is the creation of the Investment Promotions Council, which would institutionalize the whole-of-government approach and provide a platform to consolidate initiatives of various investment promotion agencies. Why is the Philippines an attractive investment destination? Well, because 1. The Philippines recorded a strong economic growth, being the second fastest growing economy in ASEAN and one of the fastest growing markets in the world in 2019. 2. Post-COVID-19 pandemic, the Philippines is still well positioned to recover strongly because of its solid macroeconomic and fiscal management. 3. The Philippines has highly capable, innovative, committed, and cost-competitive talent. 4. With strategic market access, the Philippines is positioned as a manufacturing hub destined to other key markets, with its preferential rates through regional trade agreements, FTAs, and GSPs. 5. The Philippines has a superior bilateral policy environment and enhanced infrastructure development. 6. There is wide scope of business opportunities in manufacturing, agribusiness, infrastructure, and services in the Philippines. And finally, the Philippine government continues to improve its business climate through strategic policy reforms to make it easier to do business in the country and further encourage foreign direct investments to the Philippines. With that, I end my presentation, but please feel free to continue the conversation if you have questions or interest in doing business in the Philippines. You may reach me through Malaysia at dti.gov.ph or Singapore at dti.gov.ph. Rest assured, we will make it happen for you in the Philippines. Thank you.